Welcome back to Road to Fire. We're a family of four documenting our journey to FIRE, financial independence, retire early. Let's chat about our May 2024 portfolio update. I will share details on all of our current investments, outline our gains or losses versus last month, and how we're tracking towards our 2024 investment goals with all the numbers like always, so please hang with me. Now, do you think your primary home is an investment? I recently heard a podcast episode and the host was adamant that your primary home is not an investment. Now, after living in our place for almost 3 years, I get what he's saying. We spent a lot of money on our home already, and not even for remodeling. Just the needed regular updated repairs like the washing machine is out or the garage door won't close or bug shield for the summer. It all adds up. But I've secretly had a personal investing goal. I want to be seen as an accredited investor. Now, this isn't an official 2024 goal, but I'm mentally tracking towards it. Okay, to be an accredited investor, you must first have a combined household income of over $300,000, which we do. So we technically do qualify, or you need to have a net worth of over $1 million, not including your primary home. Now, that second one we have not accomplished. Today, our net worth is about $900,000 and $72,000 is from our primary home equity. Just to be clear, we are accredited investors. We have invested in a family business in exchange for stock equity, and I would love to get our net worth over $1 million without our primary home equity included, just as a personal side goal. Now, to do that, we need our investments to grow by $170,000 this year and the market to play nice. But unfortunately, in May, we saw a slight decline in our overall portfolio. So, we have a 2024 investing goal to put at least $50,000 after-tax dollars into the market. This will be split between our children's UTMAs, my HSA, and our after-tax brokerage account, with the majority going into our after-tax brokerage account, because this will be our key account for FIRE. But to be honest, I hope that when we do reach FIRE, we won't need to tap into this account, at least not in the beginning. So through April 2024, we have invested about $12,500 after-tax dollars into the market. That is a great start, but it's about $4,000 short from where we need to be at this time frame. We need to have invested about $16,666 to be on track for the year. But I'm not worried because May is a 3-pay period month for us, and we have bonuses coming at the end of the year that can help us catch up. Also, we're not going to be paying for my son's tuition over the summer, so we have an opportunity to increase our savings rate over those few months. My goal is to cut this gap over the summer and hopefully catch up by the time fall comes around. But we really struggled with our April budget as we had larger than expected tax bill at about $8,400, and my husband's 8-year-old phone finally died, so we needed to purchase a new one, and that cost about $525. So both of these costs cut into our investing or savings budget line items for last month, but I'm believing May will be much better. Okay, so here's a snapshot or a recap of our investments in April. I pulled these numbers at the end of the previous month. This includes both my husband and mine accounts as we have 100% joint accounts. In April, we had about $682,000 in our stock portfolio, with the majority still in our IRAs, represent almost half of our entire portfolio. Our focus is to grow our after-tax brokerage account, which is currently at $109,000 in April. We made no individual stock buys last month and continue to focus on low-cost index fund strategy with VTSAX. I expect these percentages to begin to shift as we continue to invest throughout this year. Okay, so here's our May stock portfolio or our current numbers. Overall, things look relatively the same. In Excel, I always break out our investments by what type of investment accounts we have and our outline of the balances within each of those individual accounts. First are our IRAs accounts in Vanguard, which is now 47% of our total portfolio. That is down 1% from last month. And this is planned as we continue to fund other accounts. We currently don't contribute to our IRAs. The balance is just over $321,000. Next is our after-tax brokerage accounts, which has a balance under $109,000, representing about 16% of our total portfolio, minor change month over month. Then we have our equity stock line item, which stayed the same until the next valuation. We invested in a family business almost 2 years ago, and our current stock value is about $75,000. We then have our company's 401ks for both my husband and myself. This balance is just over $65,000, and this is where we saw the biggest gains month over month. Our 401ks include monthly contributions and hefty company contributions. We then have about $48,000 in our children's UTMAs. We invest $700 a month into these two accounts. Then we have our Roth accounts, which has a balance of just under $47,000 within Vanguard. And last is our combined HSAs, which is just over $12,000, which is flat month over month. So our total portfolio amount in May is $677,421, which is down about $5,000 from April. Now, if we didn't invest as we always do monthly, this number would have been down even more. We also made no individual stock buys as we continue to focus on VTSAX. Now, I'm glad we consistently follow dollar cost averaging form of investing because even when the months are down, we still win because of our investing strategy. Also, patience is needed when it comes to investing overall, especially when you look at your numbers month over month. So our stock portfolio drives our net worth. So sometimes I don't even need to pull my monthly net worth because I know how it will shift or move based on what our stock market does. We want our investments to drive our net worth, and that was planned out. So we are in the right place overall with our long-term FIRE strategy. Our net worth isn't diversified, and for us, that is key. We don't have plans on buying new rentals right now for obvious reasons, so investing into the market is our number one or key lever to build wealth long-term. And I don't see that changing anytime soon. Property management is a pain sometimes, despite the long-term benefits. One change I'd like to make, though, is to start working towards maxing out our HSAs. We invest a good amount there, but as I get older, I know this account will become our hidden gem. We've already had steep goals for 2024, so this one will have to wait until 2025. I like that we have different options or accounts to grow our wealth, although through the same simple one-fund investing strategy. But there are 3 things we did to take the emotion out of investing, especially with the month-to-month fluctuations. The first thing we did was diversify our portfolio. We invest in low-cost index funds, VTSAX to be specific, that is a basket of a diverse array of stocks. We haven't always invested this way. We did try our hand at value stock investing or individual stock picks, and it just wasn't for us. Diversifying our portfolio has eliminated the emotion in investing and made us feel safe and secure with our purchases year over year. Number 2 is having a long-term view. Although we have a goal to hit FIRE in 5-ish years or at the end of 2030, we won't stop investing then. We plan to hit stage 6 or financial independence and then get to stage 7 or abundance. So financial independence isn't the end of our investing journey. It's just the beginning. Because we have that longer lifetime timeline, we don't stress over the month-over-month changes within our portfolio. It has helped me to find perspective, plus building wealth is not a sprint, despite what social media says, it takes time. Number 3 is to just stop checking your accounts. The easiest way to stop the urge from checking your accounts is to set a time to check your accounts and only stick to that time. I started with Friday afternoons, and that was the only time I was able to check my accounts. It then shifted to monthly, so that was like the last Friday of the month, and now it's shifted to whenever I make these videos for YouTube. The fewer times I check my accounts, the better I feel. It's how I treat the scale when it comes to weight loss, so this is kind of the same for me. Now, these are the 3 tips we use to avoid emotional investing. We aren't perfect, but these have definitely helped us in the long run. Okay, here's our FIRE investment tracker. We are working towards having $2.7 million invested into the market. In March, our portfolio was just about $650,000, and then it jumped to $682,000 in April, then slid just a bit to about $675,000 in May. We are still about 25% to our investing goal for FIRE. That means we need to amass an incremental $2 million portfolio in about 5.5 years. Sounds just a wee bit impossible, but I do love a good challenge. Keep in mind that we did inflate our FIRE numbers, so even if we are a bit under, we still would be financially independent. I obviously love a good tracker, and sometimes you just don't know how far you've come without looking back over the months. We have got ways to go, but we will get there, and I'm not worried at all. Now, May will be a better month for us. Why? Well, it's a 3-pay period month, so we can catch up on some of our 2024 goals. Also, what goes down must go up, and that's how it is always been for investing long term. So I know the market will adjust itself when needed. Also, I believe in speaking positively into the air. It's worked for me, and we have a plan. What's left is just execution. But even with the plan, things are bound to shift and change, and that's okay. So at the end of June, the halfway mark of the year, I'll be able to get a better view of how we are tracking towards our official and unofficial goals. My husband and I had a great heart-to-heart a couple of weeks ago about where we want to be at the end of 2024. When we put our minds together and our goals together, things happen. I've got this overall confidence or assurance in our goals and our progress for this year, not only financially, but personally as well. We have a few income boosters coming as well, and I can't wait to share with everyone on this platform. Now, if you made it this far, thank you so much for watching. But don't forget to like, comment, and subscribe below. Until next time.